From my poor life as an analyst, I have to give you some insights. You won't get nervous. All these slides you will get afterwards. There are much more slides in the presentation than I will comment, by the way. So just scratching the surface on this situation. It shows, on one hand, the fantastic attractiveness of real estate within Europe, and on the other hand, it shows what our beloved Italian guy from the eastern part of Frankfurt, let's say this, Mr. Draghi, meanwhile pumping the market. This is not critical to say, but on the other hand, I think when we as real estate people were asked on Thomas, can you tell something about the bubble? Which bubble? You mean, of course, the capital market bubble and not the real estate bubble. I mentioned this maybe quite harsh because if you see that what's happened within the last 4 years and especially the last 10 years, you see that there is a massive amount of money available for potential investments in real estate, whether it's 700 billion or 720 billion, no doubt. I think it's much more than the market really can cover. And again, on the other hand, you see the strategic increase of the transaction volume within Europe. This is for all assets, office, retail, industrial, hotel, and resi. The interesting thing is the subline, capital available for core investments. And I think this is, again, where we talk on the risk scenario, and the risk is increasing, Thomas, and the elections in France and Germany, oh my goodness. I think when you and we send out a press release, we try to avoid the word core, because the word core, whether it's defined or not, I think this is really the most challenging thing we are facing on, especially when you see the amount of money broke down to the transaction volume in total. Again, it's my daily job, and on one hand, as Germany, we can be a little bit more enthusiastic to say, for the first time ever in the last 15 years, we overrun UK. Woohoo! Unfortunately, I have to say this is not our main work. By the way, it's due to the cooling down scenario of Great Britain, especially the London market, UK, United Kingdom market. So on the other hand, what's happened? I think we are all faced about the poor Q2 this year, where a lot of investors, say, okay, Thomas, let's have an accommodation in the data room for the next 10 weeks, rather than make investment in March or April in the city of London, whatever this means. Meanwhile, it becomes more relaxed. I know a lot of people who have no holidays in August and September because they make the transactions they would actually made in March, April this year. Unfortunately, I have to say that by end of this year, we don't reach the amount of transaction by end of last year, and this one. And this is again for poor analyst. This is a healthy signal of the market, that the market and people, you and me, we don't accept every price in the market, whether it's core or non-core, depend. This is a rationality. On the other hand, I think we are all faced in market scenarios and situations, maybe somewhere here, 08 and 09, and 07 and 03. I would say, Thomas, by the way, industrial in the outskirts of Frankfurt for 4.9. Oh my goodness, is this real? Of course this is real, because it's risk adjusted, by the way. So don't look back, please look forward and understand the stories you and we have to tell in this market environment. So again, sounds a little bit too simple, but there is no bubble outside, as long as it's not financed like 90% LTV or something like that. So again, from the general overview, I see a much more really a stable situation in Germany. And don't get nervous when a lot of figures go to the reds, which means compared to the rocking year last year, it's okay. Split this down, you see in Q1 to Q3, we reached the 10-year, or well, it's more, 12-year average. It's exactly 32 billion in Germany, transaction volume, all in that. Our prediction for end of last year will be around 48, 47, 49. There is the Blackstone deal, and a lot of smaller deals are in on that. But we are really confident that I think that we will reach 40, 50, 40, 80 in maximum. So again, don't get nervous, because if you look back and look forward, it's really it's a booming scenario. On the other hand, you all know we get more and more involved in deals, transactions, and activities in what we call B, C, and D locations, whatever this means. I spend, meanwhile, most of my working time in locations which are not here. Not in Berlin, not in Düsseldorf, not in Frankfurt, not in Hamburg, not in Munich. It's in Heilbronn or in Saarbrücken or in fantastic locations in the middle of Germany. But again, not kidding, but I think this is again where you can really see by end of this year that the ratio between the top 5 and the rest of Germany, which is the rest of Germany, meanwhile overrun that. It was interesting thing last year. There were 2 big transactions in that figure, but again, it will be a cooling down scenario, not to the lack of capital, but to the lack of, let's say, product or developments, the pipeline. Everybody of you know this chart, and I will, on one hand, praise Mr. Draghi for his fantastic work between this and this period. He was a kind of a medicine man who gave us salvation and health and all these things, wonderful, perfect. Starting with this point, he became the Ministry of Politics, let's say this, quite frankly and open. So, and mention this, I think we end up, meanwhile, as our industry is highly correlated with his implementation of the capital things. So again, from this natural standpoint, I'm hope that Ms. Yellen will start increasing with Mr. Trump in her neck by mid of next week when the Fed meeting starts mid of next week, that they start increasing the interest rate. This will end up in a big Fed rate banner on NTV, on CNN. Oh my godness, the cheap money is, I don't think so. It's a healthy signal that we don't understand and accept all the expected prices in the market. And Mr. Draghi, by the way, I have to believe him. First of all, he's a gentleman, and secondly, he's an Italian, which means when he promised us via FAZ and say, well, we will not end up the quantitative easing program by March or June this year, so we have to believe as an industry in him. So I don't see any dramatic change on that. For me, I see that more the positive side of life, because the feeling and the expectations from analysts that he will start increasing interest rate in the in the EU soon by autumn or fall next year will cause in some, would say, pre-pushing activities. So some of you, maybe Catella too, will start in May and April things in advance of a negative impact by fall next year. Negative impact means the elections in Germany. Negative impact means increased interest rate and all these risk-adjusted things. Sounds not too negative, as I mentioned, but this is a typical scenario when in a market point is reached, that the double-digit things comes to an end, and this is a natural thing. So again, keep cool and carry on. Keep cool and carry on. So the gap, you know that it's still in a level of 350 basis point, which is okay. You will find a lot of these things in the presentation. I don't want to mention this. I think general headline is that this year in Frankfurt we don't reach, as long as we know now, by Santa Claus Day today. Maybe there was one big transaction, maybe. But on the other hand, positively speaking, I think we come up by around 5 billion investment volume. This is our definition on that. Just one slide on that, because it was an interesting presentation. We saw that. I grew up near the German-French border in Baden-Baden, so I have to learn French as my first language, which was 40 years ago. Okay, so I like the French, to be honest. And I was 4 weeks ago. I was in London in our office, and I saw this on the tube. I say, oh, tired of the fog? Try the frogs. Bienvenue à Paris La Défense. Hey, why not in Frankfurt? Something like that. I have no idea. Tried the crowds, I don't know to translate this, but on the other hand, be realistic, and this is again, it's my daily job, be a realistic guy and a rational guy. There is, of course, Dublin in the RAN. There is, it's me, and I think facing last week's announcement by UBS on Friday. So I think the first really positive sign for Frankfurt are coming to the market, and this is a good thing. No doubt, London will be in my and maybe your lifetime financial spot #1 within Europe. Whatever Europe is then. There is New York, there is London, there is Tokyo, first rank, no doubt. Second thing, and this is again where I'm maybe a little bit more optimistic than the rest. I have no idea, to be honest, what, I don't Mr. Hollande, who then follow him, but the connection between the French political pressure on Brussels or on Ms. May, with the definition called, okay, last time the Frankfurt guys got the ECB 25 years ago, and now it's time for Paris. I think this is a level of discussion I have no chance to follow that as an analyst. On the other hand, I see if it's a steadily flow from parts of UBS, parts of other coming to Frankfurt. I think this is a good thing. So whether it's 20 or 25,000, I don't think so. More on the 10,000 less level, and this is okay for Frankfurt, by the way. On the other hand, and you mentioned this, which was what quite sounds for German harsh, but if you talk to these gentlemen from Great Britain, and they want to pay the bill, they say, oh, it's so cheap here in Frankfurt, by the way, let's go there. It's not a rational decision to go to Frankfurt, but I think we should face this because there is a functional cluster in place called financial service industry. There is the ECB and a lot of things which create a network, and this is a most interesting thing. From the technical standpoint, by the way, and this is negative for Frankfurt, I'm a believer of the Dublin case, which is of course a smaller portion, but I think we shouldn't underestimate what's going on in Dublin, especially on the Google data center case. These things from the risk thing maybe will come in discussion maybe in springtime or next year. So we hope that by March, April next year we will see more announcement coming to Frankfurt from, I won't say British banks, but international banks with a British hub formerly known as London. Maybe now it's Frankfurt. And coming back to that, just the expectation for the rest of Europe, continental Europe in this case. We don't see any dramatic change in the ECB. Don't get nervous next week by the Yellen case and the Fed increasing rate. It's a healthy thing, by the way. There is a high amount of available capital. And I mentioned the pre-pulling factors from investors if they are facing a negative impact for autumn next year, political thing, economic thing, all these things. Expected yield compression, no doubt it will go further to the south, speaking frankly and open, on the wishing list office and retail properties. But from my, let's say, gut sentiment, we are facing more of these so-called niche things like a data center, like parking. Just so Thomas Beyerle this morning, please. So a lot of the things which wasn't on the radar of investors the last 5 years, and now they are coming back. It's not a big size and a big volumes on that, but you see that some parts of the money will be now coming also to these niche things. Interestingly speaking, for us, I think the market environment from the fundamental side, it's an absolutely fantastic thing, especially in Frankfurt, by the way, but also in Berlin. The rising TEBA volumes and a lot of these things which are from your maybe and sometimes my perspective are in negative. Like it's Renzi's case. Spain, absolutely robust, stable situation. They have meanwhile a workable government, which is okay. Number 2 in Europe, perfect, fantastic, okay. So I think a lot of these things, Nordics by the way, a lot of these pictures, and I would kick out, of course, Hungary. And so this is the only political risk factor we are facing here in Germany, in Europe right now. But I'm really confident that the risk, it's much more in the headlines of the Tagesschau and Heute Journal maybe, but not in the daily lifetime of our investment industry here in Frankfurt, but also in the rest of Europe. And again, the most fantastic thing, just showing the figures, is the housing sector. No doubt that this is the booming thing. And I don't want to tell any secrets because I don't know the secrets, but if you talk to the political people in Berlin, whether it's the black, the green, the whatever, yellows maybe, they say, Thomas, don't get nervous. Whatever happened in fall time next year, we see that the rental price will be also overlapped to the new development and not just the existing stock, because this was not what we've made last time. Statement last week from a guy sitting in the Deutsche Bundestag, and so there is obviously a common sentiment for that the rental break and all these negative impacts on the market will driving our industry. On the other hand, I don't see any end. The rents, especially in the housing sector, will rise more than expected due to the huge demand of this urbanization thing, whether it's Berlin, it's Frankfurt or whatever. So on one hand, we are crying for affordable housing. On the other hand, there is the market, and the market, it's you and me. And so first of all, thanks a lot for your listening to the presentation.
Great.